Hello everyone, it's Friday, May 2, and today we'll take a closer look at the euro and British pound charts to gauge where the market may be headed. The euro posted gains amid a light macroeconomic calendar during Thursday's early session, but later reversed course, falling sharply on the back of US data. The ISM manufacturing PMI dipped slightly to 48.7 in April from 49.0 in March, but crucially, it beat market expectations of 48. The report was enough to reinforce the bearish trend that has been building since midweek. As a result, prospects for a near-term rebound in the euro remain limited. Today's macroeconomic calendar is far from empty, and key data releases could shift sentiment quickly. Let's take a closer look at what is on the agenda. An early European trade investor attention will center on manufacturing activity across key Eurozone economies, with PMI reading due from Germany, France, and Italy. Most indicators are expected to slip from March levels, potentially weighing on the broader Eurozone manufacturing PMI, which is forecast to edge up slightly to 48.7 in April from 48.6 a month earlier. Better than expected data could offer short-term support for the euro. Markets will also be closely watching the Eurozone's latest inflation figures. The Consumer Price Index is expected to decline to 2.1%, counting the deceleration in price growth that began in January. However, the core inflation rate will carry more weight. The core CPI is forecast to tick higher to 2.5% in April from 2.4% in March, still above the ECB's 2% target. If the figures exceed expectations, it could facilitate the ECB's path to further rate cuts, bolstering sentiment around the euro. Later in the day, attention will shift to the US non-farm payrolls report. Economists expect job creation to slow to 133,000 in April from March 228,000. A weaker than expected reading would likely solidify expectations of further easing. Paradoxically, however, this could strengthen the dollar. The unemployment rate is projected to hold steady at 4.2%. Let's now turn to technical analysis. The 1-hour EUR USD chart indicates that a decline followed by a false breakout at 1.1269 would trigger a buy signal, pushing the price up towards 1.1337. A breakout and consolidation above this level would open the way for further gains towards 1.1386, with the most distant target set at 1.1437. At this mark, I would recommend going short on the rebound in anticipation of a 35-40 pip move. Short positions at 1.1337 and 1.1386 should be considered on a false breakout, with 1.1269 as a downside target. If the price breaks through and consolidates below 1.1269, weighed down by strong US data, the euro could dive to 1.1219, potentially reaching 1164. At this mark, it would be wise to go long on rebound, expecting an intraday correction of 35-40 pips. Going long at 1.1219 and 1269 would only be relevant in the event of a false breakout. Speaking of the British pound, a false breakout at 1.3317 would generate a sell signal. With no major economic releases from the UK on today's calendar, bears are likely to take control, potentially dragging the pound-dollar pair down to 1.3276. A break below this level would open the way for further losses toward 1.3240, with the most distant downside target at 1.3205. At this mark, going long on rebound would be a prudent move, targeting a 35-40 pip intraday correction. Long positions at 1.3267 and 1.3240 should only be considered in the event of a false breakout. If selling pressure remains limited and the price consolidates above 1.3317, the British currency could rise to 1.3354, where short positions would be relevant on the false breakout. Going short on the rebound should be considered at 33.94, anticipating a 35.40 pip pullback. Good luck to everyone and have a great weekend.